Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We have returning guest Peter Grandich on the show. Peter, thank you for coming back on the show.
Always a pleasure, Steve, and Happy New Year.
Happy New Year to you, sir. We're going to talk macro economy, our favorite commodities. We're going to talk precious metals, copper, and just your overall view and top pick for 2024. Let's get right into it. It seems like everyone was wrong on the recession call for 2023, including me. What uh, I mean, 50% increase in public debt over the last 2.5 years. I mean, it's really incredible. I think there was one month where we almost had a trillion added to the debt. What is your overall macro view of the economy and financial markets today?
Well, to defend some of those people, I was not one of them. Mine was 2024 for recession, but to defend some of those people, if not for some very sophisticated uh, arithmetic calculations by the Bureau of Labor Statistics, who now for almost an entire year has put out employment numbers only to be retracted substantially lower in the coming months. There was more of an illusion of a strong economy than really was. Some will argue that without the government hiring and government spending, we literally did have a recession. I think what's more important about that is that we continue to see more people, Steve, falling below the line. A small amount of number are making it into the so-called elite status, but for everyone that does, so many Americans are going sideways down. We're seeing such a dramatic increase now in working class Americans needing to use credit cards just to pay for necessities. I mean, that's a really ominous concern for an economy when so many more people literally have to use credit just to pay for necessities. And so, whether we got it in 2023 or 2024, I think the most important thing is the economy is not going to be very, very strong. And it's just getting overrun, indebted, and now going to have political paralysis, can be the only way I could describe it, between now and the election.
Yeah, so essentially what you're saying is the government has juiced the numbers, and then when they come out with the revisions, nobody pays attention to that. I noticed, I think everyone else did too, that they changed the definition of recession. You know, that definition doesn't work anymore. We're going to try something else. Last I checked, credit cards, the debt is over a trillion, which is insane to me. And you know, people are using their credit cards to buy groceries, which is never a good sign.
You know, there's so many things, Steve. We can spend hours talking about it. But another important thing, most Americans don't know that America's number one asset on our books is student loans. That's our number one carrying asset. And now there's a movement among those who are not purposely paying it back, claiming that, they're under stress and all. And if we start to see that snowballing and seeing a lot of those uh, expected payments, remember the government can only survive on two ways: taxes and cutting spending. And they're not very good at cutting spending. That never happens, but they're very good in raising taxes. So I think the other thing that we're going to see in 2024 and more is we're going to see higher tax levels, both on the federal, state, and local levels, and that's never good for your economy.
Yeah, and another thing to tack on with that student loan debt is it's one of the few that you can't claim bankruptcy on. You owe it, and it's not going away. So I think they're going to be in for a very rude awakening.
Yeah, this whole financial situation, I don't think, certainly the general financial service industry is not paid heed. It's hard to imagine that we are seeing such increase now in the debt level. To go up $1 trillion in less than 6 months is just a phenomena that, for someone that's about to celebrate his 40th year at Wall Street, when I started, we didn't even have $1 trillion in debt, period. Now we do them in 6 months. So it's very, very concerning of mine to the point where my forecast, looking out past this year, is I really believe this, Steve, and I got nothing to gain from it. I don't have any product or service that's going to benefit what I'm about to tell you. But I really believe the social, political, and economic woes coming in the next 3 to 5 years tops, that's how close we're getting to it, are going to make the Great Depression look like a walk in the park, because we're so much more of a mess now than we were even in the Great Depression. So I really, really think all these things that are being kind of still pushed aside by this don't worry, happy crowd that exists on Wall Street is really going to catch a lot of people on the wrong side of things.
Yeah, yeah, I think you're right. I think you're right. Um, you touched on it a second ago about the impact of the U.S. election. From Alpine Stacker, he wants to know, says, I know Peter's not a bull in terms of the overall stock market. What does he think the impact of the U.S. election this year will be? Would it support the market like it has in the past? What are your thoughts?
Steve, I can't answer that, and I'll tell you why. We have one person that's currently indicted in multiple places. We have another person on the other side who doesn't seem now that he can even operate for 6 to 8 hours a day, let alone to run for another and exist for another 4 years in that position. And we have two parties that not only cannot get in the same room with each other and bring decent legislation forward, but we now have fractions within each party that is fighting with those own members. So I don't know how anything but political paralysis takes hold. And whether you like or hate Trump, which that's all it seems, people either very much like him or hate him. There's no middle ground. I'm probably one of the few people that are on the middle ground, and that is uh, more and more gaining momentum. It's hard to imagine at this point in time, especially as things become worse off. It seems that the more they try to hurt him, the more strength he gets. And as pleasing as that may be to a certain group, that if he wins again and for a short period of time, there may be some ceasing or lessening of issues. If you think the people that disliked him and did all these things up until now not to have him in there again, if you think they're just going to walk away from that, it's going to be, I think, even worse than the first go around. So I just don't see politically how this United States can have any cohesiveness from the political empire. And when you think about the economic and social problems we have that people would call upon politics to fix, that's why I have such a dire outlook going forward, Steve.
Yeah. Okay, let's move on to commodities. What is your highest conviction commodity for 2024?
I still think it's gold. And the reason is I just before you and I made an update for my followers. And I noted that back in the end of 2021, when I did say it's come time for me personally not to own general equities not related to resources, and that I would choose gold over the stock market, that really took a lot of people by what? But for 2 years now, gold net is still ahead of what the stock market performance was. And here's the real crazy thing, Steve. You can call up 100 financial licensed advisors now and ask them this question, and I'm certain 98 will say it one way. Hey, what has done better since the new millennium started, the stock market or gold? And they'll all go, oh, the stock market. It's been phenomenal. But gold has outperformed the stock market since the new millennium for almost, we're on a 20, going on 24 years now. It is the most hated, mistreated, misunderstood. It even has another hate group now, the crypto nuts. They hate it as much as the general equity people do, and yet it manages to keep moving forward. So I still feel that we're going to get above 2,100. When we do, that's when this market really takes off. And I don't think it's going to be too long after that that we have a $2,500 gold price.
Yeah, that's our highest conviction as well. I thought it would have been last year. Maybe in a sense it was. I mean, we did hit a new all-time high. We broke through it by 70 or 80 bucks. The way I look at it, especially as a technical trader, is it's like the needle has pierced the balloon. It's reached a new all-time high. It's never been done before. So there's a lot less resistance built up on that triple top that's been there before. It's pierced it.
We need to talk about nominal new highs versus real new highs, because if we adjust for when gold was at those previous highs, We need like a 2,300 and change gold price to really reach a new true all-time high. So it's still substantially below that. A lot of people talk, oh, it's overpriced and all this other stuff that the people that keep talking about, it should be a lot lower. And again, I still say it. It's the Rodney Dangerfield of all investments. It gets no respect, especially when you look at the performance, as we just noted, since the new millennium versus the thing that everybody talks about, the stock market.
Yeah, yeah, yeah. That's a good point. We've had a lot more currency printed in the last few years, and gold should be much higher than it is.
Oh, and let me make a point for the crypto nuts because they're all 25 and under. Rodney Dangerfield was a very famous comedian that used to say he didn't get any respect because the young people may not know who I'm talking about.
No respect. Yeah, as far as crypto, I talked about that on the last episode. That Bitcoin right now is at 44,000. And I'm trying to equate that into barrels of oil and ounces of gold. And if someone were to ask me, would you rather have one Bitcoin or would you rather have 22 ounces of gold? I'm never taking the Bitcoin there. That doesn't even like make sense to me.
It's the greatest, and I have to tell you, a fabulous ultimate marketing hype of an investment product in history. It makes even the tulip mania look small to what they've been able to make it sound like versus what it really has. And you don't have to go anything further than this. You have one person that's very famous in it that has been telling people for years, sell everything you own, homes, businesses, mortgages you have to, and buy one product within a type of a product. That's economics 101. You never do that. And the financial service industry never takes them to task for that. But then you have two leading people from Wall Street, particularly one who happens to have a last name Fink. Now, when I was a kid, we were told never trust anybody that's a Fink. But the bottom line is, here's a person that just a few years ago said it's criminal. I wouldn't go near it with a 100-foot pole. Nothing's changed in that technology. There hasn't been a great improvement. Whatever it existed a few years ago still exists now. But suddenly it's the greatest thing since sliced bread. Why? Because they can make money from it. And that's what I think that's going to be caught. That's why the hype can still continue. My feeling is that they're going to get it to run through this halving thing. And then after that, it'll go through another washout period. But it is a phenomenally cult-like group. There is, if you believe in it, there's nothing that can happen that turns those people negative. And you want to, that's what a cult is. That's not an investment. That's a cult. And cults can run for a while. They've existed many times and grown large, but eventually most of the cult members leave or die. So I just, to me, it's BitCon. It's not Bitcoin.
Yeah, yeah, yeah. Okay, Wired wants to know. We got your take on gold. What is your take on silver for 2024?
Silver continues to be, and I get myself in trouble when I say this again, but it continues to be a second class towards gold. It just although it has better fundamentals now than it had 10 or 20 years ago, there's more usage for it. It still needs gold to open up doors, so to speak. And I think all of this will happen when gold, if and when, because I can't say it's gone. I'm obviously betting it is, but that doesn't mean it's going to happen. But when gold gets through 2,100, it has a 2,100 and something price tag. The amount of new interest into the metals will turn on a dime. And that's when silver will probably have its day in the sun. But until then, it's probably going to lag the performance of gold. And it's just something, as much as some people don't like to hear that, because retail people like to buy quantity over quality. So they rather have more silver coins for the same dollar amount than what a gold bar would be. But gold still at this point in time, in my book at least, is a little bit more of a preference over silver.
Okay, so you see, I guess like history has shown that generally speaking, gold moves first and then silver follows.
Yeah.
And for you, that is going to be consistent gold prices above 2,100, which is going to capture the,
Yeah,
uh,
that's
the
that's the story that's going to bring everybody in when the media is speaking about a 2,100. We're above all the previous charts by at least a few dollars. There's none of this quadruple top talk still and all this. And that's when the momentum players will come in. There'll be a big pop in gold, could be 50 or $100 in a matter of days. And that's when the silver market will catch fire as well, in my opinion.
Okay. And how are you playing the gold and silver play over the next few years?
Well, if I didn't have the worst year ever in my career in 2023 playing junior resource stocks, I'd probably be long futures on them right now.
Huh?
But at my age and the fact that I still want to remain married, I think I'm going to just be a little bit more conservative. I still believe, and still hold physical bullion. I think, yes, there is leverage through the mining shares, but we learned a very good lesson in 2023, Steve. A lot of guys that are still around won't say this, but I will. We used to all say at the gold shows, owning mining shares is like owning gold. 2023 proved that not to be correct. So if you really want to own gold, you got to own the physical gold. The leverage and the speculative end comes from owning shares related to gold.
Yeah, maybe we've seen a little bit of that in uranium because the commodity itself, the U3O8, the yellow cake, has outperformed the equities. And but we're starting to kind of see a transition now. Maybe we can transition into uranium, where Cameco has been outperforming pretty much everything. And how are you feeling about Cameco right now? Is it still a strong hold?
Yeah, it's still my core holding. I got involved with uranium just under 20. I said it would get to, 100. We're only a few dollars away from it. I really felt that early on you had to stick to the producers or the people that own physically. The little explorers were going to have a tough time. But when we get through 100 and stay there, it's going to be too tempting not to even start to throw some serious money at the junior uranium explorers. But it needs that, and it needs that uh, talk outside of its own little world. We have to also bring out one thing, Steve, and I don't want to take up a lot of your time, but this is important. The actual junior resource market, all of it, playing all the metals, isn't anything what it used to be. It has been beaten up. It's had great competition. Money that used to flow into it now goes into things like crypto and all. It's been overregulated. Individual financial advisors who used to build book of businesses just around owning a bunch of these and all have moved on to other things, asset management and all. And worst of all, those junior companies now have to get to these end users, the junior buyers, almost on a case by case basis, because there's no more intermediaries like financial advisors that if you got one advisor, you got 300 or 400 of their clients. So it's become very difficult for a junior resource company to operate versus how it was 20, 30 years ago. And then throw in, there's not a lot of places in the world that you might have went to 20 or 30 years ago that you would still go to now. So it's a much tougher market, and all that plays a role in why the juniors don't seem to do as well as you would expect to, given the metal prices. But those are some of the reasons for it. It's not an excuse. It's just a fact of life in my book.
Yeah, yeah. It so you're kind of looking at $100 as probably going to be the pivot point. Is that just simply because of a round number, or is it?
Yeah, I just think it just, media is still an important part in marketing and anything, getting public attention for whatever you're trying to do. And it's very, very difficult for the metals industry. It's always never been one that spent a lot of time on industry promotion. It spent money on its own promotion, but never really focused on an industry. And now, because of that, it's one of the reasons why we're so bullish on some metals, because not a lot of money was spent actually going into the ground to find all these metals. So if you want to listen to Wall Street's bullish arguments to where the world is going to and all these great electrification and all this other great growth that they predict, ask them where they're getting the metals for all those products. And who are they asking to get? If you're a major mining company now, Steve, and you're seeing what's going on in places like Panama and all, you're going to think twice, maybe three times before you start throwing $1 billion into some new mine in the third world, or certainly not a country that we're more comfortable being in, like North America. And now those are the places where people are going to expect to go to find additional new metals. So that it's a very bullish factor for the metals themselves, but it's still going to be something that dampens the mining industry in general.
Yeah, I've been very surprised over the last couple of years, the pivot that Chile's taken and that Panama recently took. That was an eye opener. You mentioned that you think that we're kind of in the same camp and we're literally betting on it. We've been selling our physical uranium and buying into some of the juniors, hoping for that pivot that you're talking about. Um, Okay, let's see. Silver, copper. What's your view on copper? Last time we had you on, copper was 350, and you said 450 is probably going to be easier than 250. So far, it looks like you're right. We had a run up almost to $4. We're sitting around 380 or so right now. How do you feel about copper?
Yeah, copper's made its lows. Unless the world just literally fell off the cliff economically now, we're already seeing a pretty well slowdown. Look, we got oil now breaking potentially below under $70, and the Saudis are actually cutting prices. Listen, that's only happening because world demand is down because economies in general aren't that strong. And normally that's a very, very bad sign for what we call Dr. Copper because it used to be so economic sensitive. But here, because we've had such limited uh, expiration compared to what is needed in the future, even the expected oversupply that was going to exist in 2024, analysts are now saying is disappearing, and we're going to have actually a small deficit, even the way things are now economically. So we've seen the lows in copper, but again, like gold, 2100 is important to it. A $4 and north price for copper is really what's going to be needed to get the shares really people excited and flowing into. But I think that's only a matter of time. I think as we get into this year and people start then already looking out to 2025, where we really start to see this copper deficit take hold, then I really think the metal prices, it's going to start moving back into the 4.25, 450 area. And, there's a lot of money to be made on copper projects with copper at 450.
Yeah, it okay. That's good to hear. So you think the low in copper is in? Um, let's pivot on that and go to any updates on Arizona Metals. I see you've been sending out tweets and everything. What updates do we have for Arizona Metals?
Well, the company put out an announcement that they are planning on continuing drilling their main asset at this point in time, that they're seeing some really interesting potential new targets. And also, because of some other exploration work that they've done, they've increased their confidence on what these projects may be worth when it's all said and done. Again, I'll just say it. It's the single best exploration upside project with an already asset that well more than supports the current share price and in the most attractive areas in the world, North America, and in one of the best jurisdictions to be looking for, and that is the state of Arizona.
Yeah, they got 40 million in cash right now, which they say they're able to drill about 60,000 meters, and they're just plugging along, going right at it. When what do you think the time frame is on this for them to complete their drilling? I didn't catch that in their update.
Well, that's all going to depend on how fast their permitting comes now, because what they basically ask for is the ability to drill wherever they need to drill versus these limited areas. And the timing of receiving that will impact that and all. My biggest fear, Steve, I'll just say it to you because I know you have a keen interest in this, is that they're gonna get a relatively cheap takeover offer, which to some people will be hard to pass on if it's done at a certain level and before the market reheats up again.
Yeah.
Uh, People say, well, there's no resource out yet, so why would a major take a chance on that? This is just, it is so undervalued, in my opinion, and so much upside going for it that somebody can come here and even offer twice the current price, which is still substantially below its all-time high price. And I think it would be hard to sway a lot of people not to take that liquidity because so many other things are attractive as well. And so if it's a good fear to have, yeah, okay, maybe the fear is I only end up going back to what I originally paid for it or somewhat higher. But I'm more concerned about that than losing money at this particular time. That's me. Now, that's my risks. That's my mentality. That's my own doghouse that I'll have to go into if I'm wrong. And so because I feel that way, not everybody should be, but it is from a project standpoint. In my 40 years, I don't remember being involved in a project more interesting with upside potential than the project itself has. And
Okay.
that's not counting the separate project they have that they're talking about spinning off, which I prefer that they would actually do some drilling on. But we as shareholders will get the vote on that and all. And I certainly would not vote for a spinoff without some work being done on it. But whatever happens, happens. But it's very hard to figure out. And they're not the only ones that fit into this story. This isn't the only thing that exists like this. But it's very hard to look at it if you're a buyer of the share price today, how you end up losing money in this. You may not make a lot, but it's very hard to say you're going to lose a lot of money if one buys this situation. Because, Steve, they already have a future mine here. This K, the initial resource isn't out yet, but it's well on its way to being a mine. And so that's why, as frustrating as it is sometimes for other reasons, I have to keep in mind that from a project standpoint and how they're developing it, you couldn't ask for better things to be happening.
Okay, so you're saying we want to see them keep drilling and run through this cash
The
to
sooner the
staff.
better, Steve, because like I said, uh, the old boys network is gone in the mining industry. 20, 30 years ago, I would have never said that, all things being equal, because they just didn't cross paths. They were all friends with each other. Now it's every man and woman for themselves. And there's not a lot of great projects like this sitting out there, especially, like I said, in areas where, as Michael Gentili said, this is one of the best places he ever saw to be developing a mine anywhere in the world. And he's their largest shareholder. And I have to tell you also, that's another reason for my bullishness, that Michael Gentili maintains and still feels as positive as he does and is their largest single shareholder. He's the best, most brilliant, financial savvy, and Christian man that I have ever met in my 40 years in the mining industry. And for me right now, that goes a long way into my decision making.
Okay, all right. Yeah, he's got an amazing track record. Um, okay, Arizona Metals. We touched on it earlier, and today, the 8th, Monday, oil shot down. Crude oil shot down about 4% or so. What's your take on that, and what's happening in Saudi Arabia?
Well, I think there's a few things that are happening there. I think the first thing is the Russia-Ukraine war in many minds now is suddenly over. And in other words, it's only a matter of time now that, the United States looks like it's not going to keep throwing and writing endless checks, open-ended checks. They seem to be not doing what we were trying to imply and were being victorious. In fact, they were not doing very well. And I think so that fear of that conflict interrupting supplies for the moment, which I think is a mistake, but for the moment, people don't see anything in the Middle East happening where suddenly oil supplies can be interrupted, and a general malaise economically worldwide. China is still not looking like it's rebounding in the way that they always used to. And here in the United States, we're not knocking them out of the ballpark either. So there's no reason to think that oil can't see the low 60s again. Now, I have to tell you, at that level, I think I would be keen to be looking back at that. But I still think it can get down there. And there's no, and again, there's competitive stuff like certain types of metals that to me still look more attractive. But if you said to me everything was equal and oil was now $59 versus 69, boy, that would pique my interest at this point.
Okay, okay. Yeah, we woke up this morning and a few of our oil limit orders hit. So we're like, oh, what happened here? Awesome. Right on. Well, thank you very much, Peter. If someone wanted to get a hold of you, how would they do that?
Well, petergrandich.com is the website. I'm on Twitter. Steve, I just want to tell you, we've been interviewing me a while. It just gets better and better. I've been watching a lot of the interviews that you do, and you're moving in the right way, but I still don't want to play cards against you.
Oh, thank you, Peter. There will be links down in the show notes below. You know, cards is man, it's a fun game. I went out to Vegas and I played some tournaments and I got second in one of them. And it, you know, if you give me 20, maybe 25 hours in a card room, I can usually pay for whatever trip I'm going on. It is such a fun game, and you know, it's all about game selection. You know, you look around the poker room, and if you see a table full of guys wearing visors and sunglasses with headphones on, you avoid it. And if you see a table where people are cheersing and drinking beer, that's the one you sit at, you know, and it's just play at the game where people don't take the game as seriously as you do. You know what I mean? And I think it's the same way in stocks and commodities, especially, is, you know, just play the game that no one else understands, and you come out ahead.
Yeah, you know, the funny thing about Texas Hold'em, Steve, is when I was growing up, 2021, it's the last game anybody wanted to play. Now
Oh,
it's the first game everybody wants to play.
interesting. What were they playing back then? Five card stud,
Seven
seven card
card,
stud?
seven card, five card stud. Yeah.
Okay, yeah, those games are not my specialty. Those ones I pay. Awesome. Well, thank you very much, Peter. Links will be down in the show notes. Check him out, petergrandich.com, and check out his Twitter. He's very active on there and puts out a lot of good insights. So, Peter, you have yourself a great rest of the day. Thank you, sir.
Thank you, and God bless you, Steve.